Hello everyone. The final G20 communique made no mention of Japan, instead just pledging in general terms that we will refrain from competitive devaluation. We will not target our exchange rates for competitive purposes. How could they do otherwise? The kind of super stimulative monetary policy that Japan is considering implementing is really no different than what the US, Eurozone, and Britain have already instituted. Japan alone among the major countries has refrained from extraordinary monetary stimulus, even while the other major central banks have exploded their balance sheets. It's only fair that Japan have its turn too. And could China, also a G20 member, criticize Japan for intervening in the FX market? The statement was actually a bit weaker than last Tuesday's extraordinary G7 statement, which said that, quote, policies will remain oriented towards meeting our respective domestic objectives using domestic instruments. This probably reflects Japan's willingness to shelve the idea for a fund to purchase foreign bonds, which admittedly would have been specifically aimed at weakening the currency. But far be it from me to mention that Fed Chairman Bernanke himself suggested buying foreign bonds as one way to get out of deflation in his famous 2002 speech, Deflation, making sure it doesn't happen here. But he made that speech while he was only a Fed governor, not chairman, so he was free to say what he thought would work and not just what was politically correct. Net, the agreement seems to be that Japan can do pretty much what it wants on the policy front as long as it keeps quiet about weakening the yen, which is fair enough. Those are the rules that other countries are playing by too. This amounts to a green light for Japan to enact monetary and fiscal policies that will weaken the yen, so long as it doesn't say that that's their intent. Depending on who the next Bank of Japan governor is, something we may get an idea of as early as this week, I think we're likely to see a more active Bank of Japan in coming months, and the yen is likely to weaken further as a result, in my view. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.